All right. Good day, forex traders. Happy new monthly candle to all the forex traders. Okay, today I'll be giving you guys top-down analysis on USD card. So I will be telling you, or I'll be telling you what I saw before I entered the trade. So let's just go. In the monthly time frame, what I normally check is the structure. I will come and check the structure and candlestick pattern. That is what I normally check. So for the structure of this very moment, the market actually came here and made lower low, lower high, lower low, lower high. Now on a norm, the market should come here and make a lower low, then make a lower high, but it came and break structure. You get? It came and break structure. Now going up again, this resistance here couldn't allow the market to push further. That is what is causing this very range. So it came here, you should go here, and if you look at this thing very well, you notice that this is a head and shoulder pattern. If you check very well, this should be a head and shoulder pattern. Just want to be very big. This should be a head and shoulder pattern because of the market actually came in the structure. But this is bigger time frame. Sometimes it is not that valid. Not that it's not that valid, but not that it's not that valid, but it is. But it is very hard for, like, it will take time for all these protocols to be met. You get? So aside from that, head and shoulder, on a norm the market should come and be going down. But what is keeping this market from this going down is this double bottom that formed here. It came when it was going down, it couldn't break this support here, so it came, touch, go up again, touch, form a double bottom, now broke the neckline. That is what is causing this range. This support, this resistance here couldn't allow the market to go up, while the market is also resting on the neckline of this double bottom. This is what is causing this range right now. So we'll be focusing on the range. Now on the norms, according to market chart patterns, if market consolidated and break out from that range, there is high chances that the market will give the pip count of how it ranged. Now the market ranged from this point to this point. So I just measured it. Should come at least retest this point, but it's actually ranging because of, like I said, because of this support that is here. That's one aside. So let's just focus on the immediate trend. So the reason why I just told you all these things to bear it in mind, because it might occur in the future. Just I journal it down. Forex trading, doing it, we are not going anywhere. We need to stay and watch all these things. So okay, why I took the sell, now focusing on the immediate trend, why I took the sell is because of one, the candlestick pattern. The market came here and broke this trend line with engulfing candle. That is what interested me. The market was actually bleeding from here. On the nose, the market should come and respect this support and keeps going up, but the market came, broke this counter trend line with this engulfing candle. Like the market has been breaking it from the weekly, but the month just ended, and the market actually broke it with engulfing candle from the monthly time frame. So that is number one. Remember, the trend of the market is bearish because the market couldn't break from this support, so it came here and make a triple top, which is one touch, two touch, and three touch. Because of this resistance, it's holding the market so strong that it doesn't want to allow the market to go higher. So that is another confluence. Not that this market is not bullish, it is from this double bottom that formed here, and it actually came and test the fib zone. Just come to test the fib zone. So there's every possibility that it might go higher, but it's actually ranging because of that support, that resistance that I told you rather. So now let me just, since I've told you the trend of the market, okay, it has a bearish engulfing candle, and secondly, it broke the catch trend line. Now let me just plot my key levels. And then I should go to the weekly to plot my key levels, but I'm seeing some good spots here. So let me just plot it from the weekly, then I might go from the weekly to arrange it properly. It's a kind of small, so it will not look big in other distant time frames. Let me clone it. Okay. So this is where I'm focusing on. The market came here, rejected because of that resistance that I told you initially. Came here, rejected, came here, rejected, came here. I thought the market has broken up, but it came and still pointing down. So that is it. Now let me plot this other place. Then we'll go to the weekly time frame. So here is a very good. So here is a very good one to plot a zone. Now let's scroll down to the weekly time frame. Now what did I see in the weekly time frame that made me to sell this? Okay, let me just, in the weekly time frame, and what I normally come to check is chart pattern, double top, double bottom, any of these, but in this weekly time frame, it's not actually giving me what I want. It is not actually giving me what I want. So what interested me the most to sell this market is I think I need to arrange my counter trend now properly. Okay, yeah, this is the best way it should be. Yeah, pretty good. So what made me to sell this market is this market came here and broke this counter trend line. It came, tested it, trying as if doing as if it want to go up, then now come and break it. So my selling was at this retest of this break, this counter trend line. It was there I sold to the downside. That is where I sold. So let me just go a little bit. When I saw this, I just plotted my rectangle because the market has broken the counter trend line and it has given me, it did as if the market wants to go up, then later on it's too big. Then later on it broke it, so I was expecting the pullback. Where the market gave me the pullback, I just entered the trade and locked up. So this one will be very more, more clear in the daily time frame. Let's go to the daily time frame. Fine. Now this is the 4 hours. So now what interested me to say from the weekly, the market came and broke their counter trend line. They tested it, so I begin to find a selling opportunity. When this market came and give me this break and this retest, I was not feeling comfortable. I just knew that the market will come back, and the market actually came back. So when this market came back to this point to retest this zone that I drew here again, then that is when I then find the interest. to sell, to sell actually. So if I should go to my 4 hours time frame, that is how I do my counter trade line after the retest has been made. Yes. So after this, I drew my counter trend line. And another one, let me just go back a little bit. Another reason why I sold, I will never forget, is Fibonacci bounce. Hmm. Fibonacci bounce is the most important thing. Is the most important reason why I sold. You see, the market came and touched the 0.5 and 0.618. No, it didn't touch it, but it came and touched that 0.5 and went inside. So when I saw that Fibonacci bounce, I know yes, no, okay, fine, we are going lower because after the Fib bounce, it gave this candlestick. What is it called? Is it hammer or what? I've forgotten. So when I saw this candlestick, I know that this market will actually beat from that place because it gave a sharp rejection after it touched that, or it went to that fifth zone. So I drew my counter trend line. Then after this engulfing that formed here, when I drew my counter trend line, this engulfing candle closed here. I just plotted my short position. And my stop loss obviously was somewhere this area. Then my first take profit is here. My first take profit was actually here at 50% retracement. It's very, very important. I want to lose out for anything. The market can actually come here and bounce back to the upside. So here, this is how I took the trade. This is how I took the trade. This is what I saw before I took the trade. So if this market actually goes below this, what is the next step? That is the question. What is the next step? Let me go back to the weekly time frame to tell you the next step. Now, if this market comes and clear that low, the next point will be this place. Let me just keep you guys waiting by drawing line. So, okay, the next point, if this market takes off this low, the next point is this place, and if it takes off this place, obviously it's coming up to this other. Obviously, it's coming to this other low. And if the market takes off this place, it will go to this place just like that. But let me just focus on this one and remember the structure or how everything I told you before I came to this point, how the structure formed, why the market has been resisting to go up, why it formed three touches that made this market to bled. So you need to pay very close attention to it. So I'm anticipating the market. If the market takes off this my 50 fib level and 50% retracement is actually coming to this green line, and if it takes off this green line, obviously it's coming to this other zone. So guys, this is what I just saw before I took that trade. Just hope that this will be helpful to you people, give you a very clear view or understanding of the market. So this is what I saw before I took the trade. So the trade is actually running in profit. It's a new month and the market is still pushing down. That's to show that the bears are too active in the market. The bears are active in the market.